top 40 index, mostly green across the board, with a few stocks that are coming under pressure. No surprise that Kumba Iron Ore is actually down 0.8%. It has had a very strong run. It's interesting, base metals are actually much higher today. Kumba not performing that well.
Yes, and it has been after a few days of trending down. So because share prices don't move in a straight line, you will have days like this where share prices move in the opposite direction. But talking about Kumba and the base metals specifically, I think even though the whisper number is of a 9% GDP growth in China, which will come out tomorrow.
Is that what all investors have been talking of this whole week?
Not much of a whisper if we all have been talking about it.
Yeah.
We all have this number of 9% in our minds. But yes, that has been the chatter of the market. And even though it's only one data point, I think what is interesting is investors globally are trying to gauge if China is going to have a soft landing, if they are going to be successful in going away from an infrastructure-led economy to a more consumption-led economy. And
we know that the export-import numbers disappointed, previously, where we saw imports far less than exports, again creating this fear that it's not as robust as we initially expected.
Exactly, and that will feed through into base metals, Kumba, iron ore, because if that is the case and it is a harder landing than expected, you could see quite a lot of pressure on the base metals, on the commodity companies, and unfortunately that would not be offset from more consumption-led stocks.
Okay, just remind me, you are part of the group that actually don't think that the earnings are going to materialize within the resource space, so you do believe that the PE numbers that we see for a lot of the diversifieds are actually warranted?
Broadly, that is correct. We don't make firm forecasts about commodity companies specifically because they are so sensitive to commodity prices. But even looking at what the consensus numbers are, what the sell-side analysts are expecting, we would rather err on the more conservative side, look for a larger margin of safety and not partake into being aggressive in buying commodity companies, because we feel that even though the PEs are low, they are still based on assumptions of commodity prices that are higher than what we expect them to be in future.
Okay, so where are you playing right now? Because industrials have had a fantastic run. We're seeing PE, if you haven't been involved in that market within the space, many say that it's too late now to buy into the industrial space, particularly with regards to some of the retailers.
Yes, when it comes to retailers, I agree with you, but we are stock pickers and we always do and have done in-depth work on a stock-specific level. Instead of looking at a sector and saying a sector might be expensive or cheap, we believe that it's stock selection and not asset allocation that drives our investment returns. And on that basis, in the industrial space, for instance, broadly, which might be near fair value, we are seeing pockets, certain stocks, specific stocks, which are trading at attractive levels in our opinion.
Do tell then, please, Jean Pierre.
Well, we do charge performance fees, and our investors are very happy that we continue to perform and not give away our investment advice and insights for free. But I can tell you that some of our biggest holdings, and have been some of our biggest holdings for a while, have been the likes of Naspers. Yeah. On the back of Tencent doing particularly well. Naspers has run up quite nicely in the last while.
At 448, is it still a buy for you?
It still is. If you look at the run up from about 350 to 450, most of that has been on the back of Tencent. The core, the rump of Naspers has actually not moved a lot. So we see a lot of value in the DStv operations, multi-choice, and some of the other internet operations that they have. So we are still positive on Naspers, as well as the likes of Discovery, Pinnacle, Met-Air. So we've got specific stocks in our portfolios that continue to do well for us.
There's quite a bit of drama playing out for MTN, and MTN is sitting at 131 Rand. It's flat today. We've actually seen it coming under significant pressure. It's recovered somewhat now. It's still not at the level that it was a few months ago. Turkcell.
Yes,
Turkcell. That's the big issue.
That's the dirty word. And at the moment, I think what investors are waiting for is there's another court case in front of the US courts between Shell and what happened in their Nigerian operations. And the court will probably decide by June whether the US courts have jurisdiction in that case. That will set the precedent for the MTN Turkcell case. And at this point, I think most investors have decided, or I shouldn't say most because the share price has trended down, but maybe the informed investors have decided that the probabilities are more on the side of MTN being successful and that the US courts won't have jurisdiction in this case. And therefore, we see the drop of MTN to the 130 level as a buying opportunity in this case.
So what about, tell me about Sasol and what your views are on the stock. We've got a weaker local currency, we've got Brent crude at 120. Things might change for Brent crude if Iran does now go into negotiations and the UN Security Council gets what it wants. Tell me about what your views are with regards to Sasol, the risks and the pros.
Well, in the last month or so, the correlation between Sasol and the Rand oil price, which historically has been very high, above 90%, has broken down somewhat. So the Rand oil price has continued to trend higher, but Sasol's share price has trended lower. And although it's difficult to gauge why there have been more sellers than buyers in the case of Sasol, one aspect that could be contributing to that is the lower gas prices in Northern America, natural gas. Sasol spent a lot of money, more than $1 billion, buying some gas assets, and they are busy building a gas to liquids plant in North America. So the drop in the gas price there in the short term means that they overpaid for that assets. But for longer term, when they have finalized those plants, it's actually good for them because the input cost of gas is lower for them to generate profits from those plants. So we see this once again as a buying opportunity in the case of Sasol as well.